Let's go into the individual stocks. Acucap is primarily a retail-focused property developer and listed on the JSE in March 2002. The company published their financial year-end results today, reporting a 6.05% increase in distributions. That's to just over 292 cents per unit. That's for the year to the end of March. The company has a market cap of 8.4 billion rand and trades on a forward yield of about 7%. Did you welcome the results we saw today?
From our perspective, the Acucap results were slightly disappointing for us. And when I just came from the results presentation earlier, what we're starting to see is that the retail side of the business, in Acucap's case, about 70% of the asset base is retail, is doing well. So trading density is growing 7 to 10%, which is real growth if you adjust for inflation. But the office side, which is about 20% of the portfolio, is still in a very bad space. And to put numbers to that, their rental reversions, pretty much where leases are expiring or leases are being renewed relative to expiry, are falling about 12 to 15%. On average, they were about 12% down. So we're a bit concerned around the office portfolio, happy with the retail, a bit disappointed with the result.
It's relatively big from a market cap perspective. And in fact, I'm always surprised by the numbers in the property space.
That's a good point, because we stand here talking about industrial companies with market caps of 5 billion rand as though they were extremely important to the economy.
This is 8.6 billion rand.
Exactly, and gets very little attention. Again, outside of that core shareholder base that moves big capital into this because they allocate lots of money to property and income stocks within balanced portfolios. But look, just to explore the heritage and so on of this, it agglomerates a number of these important retail centres. The ones that stand out are the Festival Mall in Kempton Park. They've got something on the Bay side, Bayview, Bay something or other in Tableview in Cape Town. It is a Cape Town-based entity. Brian Cantor, as you know from Investec, who comes on often to talk about economic matters, is the chairman. Paul Theodosio, the CEO. So it's one of those kind of well-run, slightly conservative, cautiously managed property units, which is just basically added on over the years. As Kundai says, though, there is a bit of a concern about the commercial property, because I remember it's things like they've got significant exposure on Fricker Road here in the Johannesburg area. Yeah.
Actually, a very nice little property portfolio there in Fricker Road.
Yeah. Fricker Road is a nice node. I think short term, it's pretty attractive, and long term, as the Rosebank area develops further, it probably will become even more attractive, connecting Rosebank to Sandton.
And appreciating that Gautrain access.
Yeah. So from the look and feel perspective, the assets actually look good. They actually have good A-grade buildings that on face value look very good, but the rental base that they are on is pretty high at the moment.
Kundai, here's the pullback that you are referring to.
Yeah.
And we've got to look at Acucap in isolation now and say, hot or not?
Acucap, if I was to speak generally on the sector, I think from my first point, it was the sector's looking fairly attractive. There could be 2 or 3% downside risk to go, but that's not much. Fairly attractive. In the context of the whole market, Acucap for us is fairly mid-range. So, it's pretty much just a sector call as opposed to an actual hot stock pick.
So not hot?
Not hot.
Paul, hot or not on Acucap?
As you read out there, they've got distributions of about R2.92 or something, if I'm not mistaken. There's the share price at 44.45. So if you can do the maths on that, that's where your yield of around sort of 7% comes from. That's what you'd expect. That's the sector average, which has moved up from where it was, I don't know, like 5% or 5.5% or something a couple of weeks ago. So that's a big change. So I guess making that macro call is tricky, because you're kind of saying that you think things are going to normalize and that bounce is going to go back. I think that's fair enough. So on that basis, I'm prepared to say hot just on the sectoral side of things.